What is going on YouTube? Welcome back to another video. This is just another trade recap going over the trade I took today on Friday the 14th. As you can see, it is another break-even trade, which is better than a loss, but it does hurt a little bit, and we'll cover why, where did I go wrong, my thought process, everything. So let's jump right into the charts. So let's just go ahead and delete all of this. We'll leave on open for now. Delete all of this. And let's go out to the 4 hour and jump us into replay. So looking at the 4 hour, obviously buy side has been taken now in this big daily gap. Where can I expect price to draw towards? Well, my eyes are on this first 4 hour gap that we've got right here. That's where my eyes are looking. So for me to be bearish, I want to see this get run through. I need to see how price reacts to this. So jump into the 1 hour now. And London session, where are my indicators gone? Where have my indicators gone? 1 second. Okay, so my eyes are on that 4 hour gap. London session sold off into this 4 hour gap and then continues to hold it. So I then zoom in again, and what do I want to see? Well, I can see that price has taken this sell side level in this 4 hour gap. We zoom in again, and we can then see an internal liquidity sweep was there as well, internal manipulation, and we get a 5-minute change in state out of there. We get displacement from it. So just go ahead and chuck on my standard deviation projection now and mark out my key levels. So we've got buy side resting up here. This becomes my external buy side. This is the model that I'm trading on the external time frame. God, as you can see. So going into the open, my eyes are on this being the drawn liquidity. This is what I want to see get taken, which is also Asia high. So as we approach an open, we've got a 15-minute imbalance now, 15-minute imbalance, and we've got some form of liquidity within there. So going into the open, I am looking, what am I looking at? Well, we've had external buy side taken, but we're still holding a 4 hour bullish gap. I have no reason to look for shorts. I have no reason to think the draw is lower. We've taken sell side within the area we expect to reject. We've had internal manipulation. We've had displacement from it. This is the drawn liquidity. This is what I want to see. So we've got that 15-minute imbalance and an internal low within. We're already on the buy side of the curve on the bigger time frame. I need to see an internal model to align with that buy side of the curve. So going into open, big move higher. What does this move higher do? If we draw on our retracement tool, this move higher brings up equilibrium. It brings up OTE. And we can see from this move up, price then comes down, takes this internal low and taps the equilibrium to the tick, right? To the tick. You cannot tell me this market is not run by an algorithm. Move higher, tap equilibrium, take the internal low, and we've got an SMT with ES right here as well. So this becomes our 1-minute change in state delivery. This becomes our internal buy side level. I'm waiting. We wait, we get close, and then we displace through it. And then we tap it again. This was a potential long entry, targeting the internal buy side. Why? Because this entry model tells me this high is taken. I did not take this, as you can see. 948. Low quality, in my opinion, ugly internal model. There was not a single 1-minute imbalance at all in any of this price action, and it was right before the macro. So It's okay, but it's not nice. It's not clean. It's not a clear picture. So I stayed back. I sat on my hands and I waited. This does hit internal buy side, but again, I don't care. I'm waiting. I zoom out. This 1 minute change in the state is also our 5 minute change in the state of delivery. So again, let me just quickly draw on our projection now from here to here. It lines up with Asia high. That is a good sign. Good sign. So we've had now a 5 minute change in the state, and whoa. And we've now opened a 5 minute gap. The first imbalance is a 5 minute gap. Let that sink in, folks. First imbalance is a 5 minute gap. So I zoom in and zoom back in, and I can see there's a very clear low in here. I want to see internal manipulation, a reason for price not to go lower, displacement from it to give my entry. That is what I want to see. And we are now within the macro, and we're coming up to 10 a.m. with a new 4-hour candle opens. 4-hour at the time is wicking this big gap. So what happens? 10 a.m. opens. Boom. Instantly take this low. This becomes our turtle soup. Draw on our fib from the previous range. As you can see, we're in equilibrium. We tap OTE to the tick, ladies and gentlemen, to the tick. Tap OTE. Tap the 5 minute change in the state and this 5 minute gap. And I'm looking for displacement. Got a 1 minute gap right here. Inverse it. Tap it. I'm in the trade. Stop underneath the inverse. I'm in the trade right there. Boom. Nice and simple. We also get a 1 minute change in state of delivery at the same time as well, which is always nice. So where do I target? Well, I targeted Asia high, the external high. This entry model has no context, no relation to this external high. Where does it have context to? This internal high right here. This should have been my take profit, no matter what. It's a 1 point. It's a bad R trade. It's a bad RR trade. I do not care. Well, I did at the time, but I shouldn't have cared. This entry model tells me that this high gets taken. That is the low-hanging fruit. That is what should be taken. I targeted the external high, when in reality, this model has no relation to this, and I'll get on to what model does. So I take my entry, price runs up, takes the internal high, and also takes the London high. This also should have been a target for me anyway. 1.5R, we take London high. Now, at this point, I'm looking for a reason to go break even. We've got a 1 minute gap right here. I'm waiting for a bullish close out. This candle closes. I am now break even. I'm risk off. And I get stopped at break even. So it hurts. Price then does come back up, inverse this gap. I don't re-enter. And good job too. So that was a trade I took. Great learning opportunity. Great patience, great discipline, great entry. I avoided the low quality right here. I was patient, waited for exactly what I needed to see. I knew I needed to see this imbalance taken. Or this low taken in the imbalance. We get a displacement, and then boom, I'm in. No hesitation, maximum conviction. I get in, and boom. So what actually happens now if we take off some of this and we recount back to the 5 minute model? Looking at the 5 minute model, what happens? Well, we rebalance to this standard deviation projection. This is what is crazy to me. This manipulation leg, we rebalance the standard deviation of the projection leg. And then where do we sell back off to? Well, this move higher that didn't take Asia high brings up equilibrium. Again, 4 reasons why markets move. Hunt liquidity, generate liquidity, rebalance to inefficiencies, rebalance to equilibrium. We've got this 5-minute gap here. This is the model. This is the model. Sell side, buy side. This is so clear. This is the clearest model I've seen in a long time on the 5-minute. What happens? We tap equilibrium to the tick. To the tick. How does it work this well? I don't know. We literally, sell side in a 4-hour taken, internal low taken, 5-minute change in state, displacement, boom. That confirms the draw is now Asia high. This is the draw for this model. How is it so clear? I don't know. Price then comes up. We hold bullish PD arrays. We come up. We get an internal entry here, but that is for the internal high. That is not for this high yet because we need to rebalance one more time. Price comes down, fills this 5-minute, taps equilibrium to the tick of this range. And then, and only then, when time is aligned as well, we're going into the 1050 macro now. 1050 macro. We get the change in the state. And only then, this 5-minute gap, inverse, do we then go to Asia high. That is price action for the morning played out. That's what I did wrong, what I did right. Zoom out, take off replay. You can see my execution is right here. I think it's wild how the 5-minute model played out perfectly. Everything is wild. But the actual trade that I took looked something like this. Our inverse right here. Tapping it, man. I'll tap back onto the inverse. Target in Asia high. Stop to break even. Turtle soup for the conviction. Tap of OTE from this move down. Off this 15-minute gap. With the change in state delivery right here as well. That is a trade I took, ladies and gentlemen. That is me out at break even. And that is a trade recap. There's the execution arrows on NQ. Now, this break even was a bad trade. This break even should not have been break even. This break even should have been a win. I should have took profits at London High. I was greedy today. I was focused on getting a banger trade. I was greedy. This is the low-hanging fruit. Yes, it's 1.1. That's low-hanging fruit. I need to get better at that. The internal high. This entry tells me this high is taken. Not this high. Nuh-uh. Nuh-uh. The break-even trade I took on Monday was a good break-even trade. I targeted the internal lows, the equal lows. And this is the internal model. This entry tells me this low is taken. Didn't happen. That's a good break-even trade. Today, nuh-uh. Not a good break-even trade. London high should have been the target, if not here. So, great lessons to learn. Awesome lessons to learn. And we move on from it. So, just go ahead and delete all of this really quickly. And let's go into what I'm looking at next week. So, next week, obviously, buy side has been taken on the 4-hour. And this internal high has been taken as well. In this daily imbalance. But what do I need to see first? I need to see structure. I need to see displacement. I'm looking at this. If we can displace through this swing low, where this becomes our market structure shift, or if we get a 4-hour change in the state, you know, it looks something like this, then I can be bearish, pick a time frame. Then I can target lows. Then the drawn liquidity is lower. Until we get that, until the structure validates that, the draw is still higher. The draw is still all-time highs, and that is really annoying. Until this structure confirms we're going to keep going lower. So far, it seems to be bull run. So that is what I'm looking at going into next week. I hope today's trade recap was good. I hope it was informative. I hope you guys learned a lot. I love and appreciate every single one of you guys, and I'll catch you in the next one. Peace.